Hello, this is Japanese Economic Review Channel. Today, we will discuss Japan's petroleum trends for March 2026. The data highlights a significant shift, a contraction in the domestic market offset by surging exports. Crude imports dropped to 10.39 million kiloliters, and domestic sales fell to 11.27 million kiloliters. Conversely, fuel exports surged to 2.45 million kiloliters, a 126.2% YoY increase. This suggests the industry is pivoting toward overseas markets to balance declining domestic demand. Looking at crude imports, overall volume declined, but origins reveal strategic shifts. While Saudi Arabia imports rose, those from the UAE, Kuwait, and Qatar dropped significantly. Notably, imports from the USA surged by 118.2%. Consequently, Japan's reliance on the Middle East decreased to 95.9%, marking the sixth consecutive month of decline. This indicates steady progress in diversifying supply sources amid geopolitical risks. This slide illustrates the fuel oil supply-demand balance. Domestic production and sales equalized at 11.27 million kiloliters. However, input and output contrast sharply. Fuel imports plunged to 1.75 million kiloliters, a 10-month continuous drop. Meanwhile, exports jumped to 2.45 million kiloliters, growing for 3 straight months. Refineries are skillfully maintaining equilibrium by limiting imports and redirecting excess domestic production to robust international markets. Following the drops in production and aggressive export strategies, national fuel oil reserves contracted to 7.94 million kiloliters, or 92.7% compared to last year. This inventory drawdown aligns perfectly with the broader macroeconomic trends of March 2026. The deliberate reduction in stockpiles highlights a lean operational approach by the industry, minimizing excess domestic inventory while maximizing lucrative export opportunities. Breaking down the data by fuel type reveals demand shifts. B/C heavy oil grew across production, sales, and inventory. Conversely, gasoline and gas oil saw rising domestic sales despite production cuts. Furthermore, jet fuel production rose even as domestic sales fell, indicating export-driven manufacturing. These imbalances suggest that highly flexible product portfolio management will be crucial for future business strategies. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.